I like physical silver still. It's back above 30. In fact, it's back above $31 an ounce. We did get below 29 again, very briefly. And again, I think 29 is for silver what 2000 used to be for gold. If you get a chance to buy it below that level, you definitely want to do it. The problem is there may not be another chance to buy it that cheap. I think buying silver even above 31, 32 in that area is still very cheap. I think pretty soon 50 is going to be the new 30. In fact, I think 50 is going to be the support for silver.
The precious metals market shows continued strength and resilience, with gold and silver prices drawing significant attention despite a minor dip in early Asian trading on Monday. Gold faced selling pressure around $2,385, yet the overall trend remains bullish. Renowned economist and financial commentator Peter Schiff has been vocal about the potential of precious metals in the current economic climate, known for his accurate predictions of past economic crises. He highlights the sector's robust performance and maintains a bullish outlook on gold and silver. The recent FOMC minutes have been pivotal in shaping market sentiment, with policymakers' acknowledgement of easing price pressures fueling expectations of potential Federal Reserve rate cuts this year. This outlook has exerted pressure on the US dollar, potentially benefiting dollar-denominated assets like gold. Positive sentiment extends beyond physical metals, as evidenced by a notable increase in gold-related equities on the Australian stock market. The S&P/ASX All Ords Gold Index rose impressively by 1.7% in morning trade, aligning with Schiff's bullish stance on undervalued gold mining stocks poised for strong earnings. Silver, often overshadowed by gold, has also made significant gains, recently surpassing the $31 per ounce mark. Analysts foresee further increases, with targets of $31.50 and $32 on the horizon, underscoring the metal's bullish trend. Schiff particularly emphasizes silver's potential, recommending it as a strategic investment for diversifying portfolios. He predicts that silver could achieve considerably higher levels in the future, presenting an attractive opportunity for investors looking to broaden their investments. We will present clips from Peter Schiff's interview shortly. If you enjoy content like this, please subscribe and turn on notifications for updates. Thank you and enjoy the video.
The public may not like the weak economy, but Wall Street does. Stocks rallied on Friday. In fact, the S&P and NASDAQ, led by big tech, made new all-time record highs, at least nominal highs in terms of dollars. In fact, for the week, the NASDAQ was up 2.8%, and the triple Qs, which is just the biggest of the NASDAQ stocks, was up 3%. Not as big a gain in the S&P 500, although record territory, up 1.3% on the week. The Dow was up 0.78%. Only the Russell 2000 ended up down on the week, probably more economically sensitive. A lot of smaller companies that are more sensitive to the weak economic data. The big tech stocks, they're the ones that are more looking for rate cuts to boost their valuations for all the growth that the markets are inferring is going to happen into the future. But also gold. Gold had a nice week. It closed above 2,390, or right about there, so close to 2,400 again, just about 2% off its all-time record high. Gold was up 2.64% on the week. Silver also had a strong week. Gold stocks had a good week. The GDX up 5.3% on the week. GDXJ up 5.85% on the week. That index now, or the GDX, is only about 3% below its record high. So it has been gaining back some of what it lost, but the indexes are still way behind where they should be. I mean, gold is holding at a very high price. I expect a lot of these gold mining companies to report much better earnings than the street expects, because the price of gold is staying at much higher prices for a much longer period of time than these analysts penciled into their earnings forecast. So I still think that this is the best way right now to play the gold sector is through these mining stocks. I think they're still dirt cheap. There's incredible value there. People should be buying these stocks. I like physical silver still. It's back above 30. In fact, it's back above $31 an ounce. We did get below 29 again, very briefly. And again, I think 29 is for silver what 2000 used to be for gold. if you get a chance to buy it below that level, you definitely want to do it. Problem is, there may not be another chance to buy it that cheap. I think buying silver even above 31, 32 in that area is still very cheap. I think pretty soon 50 is going to be the new 30. In fact, I think 50 is going to be the support for silver. So to buy some physical silver, you want to talk to the representatives at Schiff Gold. I mean, the name is Schiff Gold, but it's Schiff Gold and silver. In fact, we sell platinum and palladium as well. I mean, those metals are probably also pretty good buys, but right now I'd put money into silver. So you can talk to the Schiff Gold representatives about buying some silver, particularly if you're in Bitcoin. I think it's a great time to switch out of fool's gold into the real thing, or maybe even silver, or better yet, maybe sell your Bitcoin and buy some gold and silver mining stocks.
In June 2024, the U.S. labor market painted a nuanced picture. While there was solid overall job growth, underlying weaknesses emerged that could sway Federal Reserve policy. Despite adding jobs, the unemployment rate climbed to a 2.5-year high of 4.1%, signaling potential softness in employment trends. Job creation was largely driven by government and healthcare sectors, accounting for approximately 3/4 of new positions. This sector-focused growth, rather than widespread expansion in the private sector, raised concerns among economists like Peter Schiff. Schiff contends that the report exposes economic fragility, citing downward revisions in previous months' figures and a shift towards part-time employment as troubling signs. The labor force expanded by 277,000 individuals, contributing to the uptick in unemployment from May's 4%. Moreover, the slowest annual wage growth in 3 years suggests a more competitive job market with reduced bargaining power for workers. The Labor Department's downward revision of job creation figures for April and May by 111,000 underscores a slowing trend in payroll growth. This aligns with Schiff's analysis of underperformance in the private sector and raises concerns about the sustainability of government-driven job growth. Let's get back to the interview.
Let's get started by talking about the big news that came out on Friday from the Labor Department. Of course, it was the first Friday of the month. And so we get the official government jobs report for the month of June. And, once again, superficially, the way it's reported in the media, it was another beat. They were expecting 189,000 jobs created, and we ended up exceeding that with 206,000 jobs. So it was above 206,000. In fact, Biden once again bragged that the jobs that were created were over 200,000 for the month. Of course, he took credit for those jobs. But as is normally the case, once you look beneath the surface, and you don't have to look deep beneath the surface, you get another very weak jobs report. Let's start with their downward revisions, because there were quite a few downward revisions. Both of the prior months were revised down. So April was revised down by 57,000 jobs, and May was revised down by 54,000 jobs. That's not insignificant. In fact, I think both of those months with the revisions, had they been reported accurately the first time, these jobs numbers would have been misses instead of beats. So the combined elimination of jobs that were previously reported as having been created was 110,000. So it really wasn't a 17,000 job beat. It was a 93,000 job miss. But again, the character of the jobs, it's still low paying, part-time jobs. In fact, if you just look over the last year, the government claims credit for 2.6 million jobs being created. Within that number, 1.55 million full-time jobs were lost. So all of the jobs that were created were part-time jobs. And in fact, over the past year, only 195,000 more people are employed now than were employed then. And of course, they're employed part-time, not full-time. But pretty much all these jobs were created for people who were already employed and who are now moonlighting in second or third jobs. And that is why, again, Joe Biden remains so unpopular, because the economy is actually very weak, because a lot of people are struggling to get by. Yes, they have 2 or 3 more jobs than they used to have, but they're not happy about that. They would prefer not to need these jobs, but they have no choice. But I think even worse was the poor performance of the private sector. We were supposed to have 160,000 private sector jobs created. Instead, it was only 136,000. And the prior month's 229,000 private sector jobs was reduced to just 193,000. Over a third of all the jobs that were created during the month were government jobs. We don't want more government jobs. We can't afford more government jobs. Where is the government getting the money to hire these people? It's borrowing it. We're going deeper into debt. And these are not productive jobs. In fact, every time the government hires somebody, it generally makes the private sector less productive, because the government workers get in the way of productivity. They don't enhance productivity, they reduce it. So because we have more people working for government, we're going to have larger budget deficits because we have to borrow the money to pay their salaries. Now they're going to go spend that money, so that's inflationary.
Despite the strength shown in the precious metals market, it's crucial to recognize ongoing challenges. The US dollar's modest rebound and the Chinese central bank's consecutive month pause in gold buying may create short-term headwinds. However, geopolitical uncertainties continue to drive safe haven flows, potentially bolstering precious metal prices. Share your thoughts on Peter Schiff's predictions in the comments below. Remember to like this video, subscribe to the channel, and enable notifications for future updates. Until next time,